let's get into it, Miss Business. So we the first thing I want to talk to you about a few different things as far as tax planning is concerned, but the first thing that we did, well, not the first thing that we did, but the thing that I want to talk about first is the cars. Because it's one of these things that gets people's attention and everybody has an opinion on it. And it's like, but like I said, everything that we do, we do responsibly, and everything that we do, we share with the public. So, when we was purchasing our cars, and shout out to you, because you was the first person that really, because I had never put a car in a business name before. I always used to just, buy my cars, lease my cars, and put it on my own personal name. Yeah. And
I never even had the opportunity to.
Can I say? Well, I can say what kind of car you got. You got the G-Wagon.
You got the G-Wagon. Outside in the AMG.
Yeah, Miss Business got the G-Wagon. Big boy, big body. The
AMG G63.
Yeah, I have the G63.
G63, that's what your Ben say.
I mean, if your CPA ain't rolling like that, man, you might need to find a new one.
G63, exactly. That's what your Ben say. That's a fact, man. Spicy. So when I was talking to her and she gave me some game, she like, yeah, I put it under my business account and she kind of like gave me the knowledge on it. So I'm like, all right, well, I'm gonna get a car, so I might as well do the same thing. And it was a lot easier than I thought it was going to be. Like, it literally took me 5 minutes. And the dope part for me is that my bank that I'm getting the financing through is Chase, and I bank with Chase. So on the app, it has like my car payment thing right there. And it's like, all I got to do is just open my Chase app, and it's just automatic for the car payment, straight from the business account. So let's talk about it. So there's two ways that you can accomplish this, right? Well, first, let's talk about the 6,000 pound rule, because a lot of people was asking about the 6,000 pound rule. They thought that that's what it was. Because if you're not familiar, well, I'll let you. They say I talk too much. You explain it. You explain the 6,000.
You're so smart, Rashad. That's because you're so smart. You can't help it. All right. So let's talk about vehicles, right? So you have your standard vehicles, right? Most vehicles, like even Range Rovers, G-Wagons, they fall a little under 6,000 pounds, but for the most part, all vehicles fall under about 6,000 pounds. And if you do, and we'll talk, and I also want to talk about the different ways you can go about purchasing your vehicle, right? So you have your financing, then you have your leasing, or you can pick the mileage method, right? Most people are very familiar with the mileage method. However, when you finance your car, when you pretty much purchase your vehicle, it sits as an asset in your business, right? And so when it sits as an asset in your business, anytime you have any type of assets, you get to depreciate them. So when you are depreciating your vehicles, there's certain time frames in terms of years that you get to depreciate it over. So for anyone that isn't familiar, when you depreciate any sort of asset, what you're doing is you're pretty much allocating the cost of whatever asset you've acquired, and you are writing it off over time, right? So with a vehicle, typically standard depreciation years for a vehicle is 7 years. However, there's this thing called bonus depreciation that Trump pretty much wrote into his tax code, where for vehicles that are less than 6,000 pounds, the first year you get to deduct $18,000, right? The second year you get to depreciate $16,000, and then the year after that you get to deduct $9,600, right? In year 3. Then every year after that you get to deduct $5,760 for each year until the value of your asset has been pretty much fully depreciated, right? Meaning that you've captured the full cost of your vehicle. Now, if your vehicle is more than 6,000 pounds, you get to deduct 100% of the vehicle, right? And why that is so important is because sometimes people need those deductions, right? You may say, listen, I purchased this vehicle, it's over 6,000 pounds. I need those write-offs, right? So instead of writing it off over years, you get to write it off 100% in that year. The good thing about bonus depreciation, you can choose to take it, you can choose not to. So let's just say hypothetically, if you were saying, you know what, my vehicle, I want to, I don't want to take advantage of bonus depreciation, right? You will just write it off over years. over, let's say, those 7 years. And why that's important is because in like tax planning sessions, we get to make those decisions, right? So Rashad talked about tax planning, where I sit down with my clients and I kind of find out everything that's going on. And then we get to make the decision on saying, okay, if you finance, okay, should we take advantage of bonus depreciation? Is your vehicle over 6,000 pounds? Is it not? And how we can treat it, right? Another option is leasing your vehicle. So when you lease your vehicle, you get to write 100% of the lease payment off, right? It's like any other expense that you are incurring on a vehicle. Keep in mind on the if you're financing as well as leasing, you are also able to take deductions such as gas, insurance payments, registration, any sort of car washes, tires, right? You get to write those things off. And I wanted to mention those things because then you have the mileage method that people are very familiar with. So with the mileage method, you pretty much, it's kind of like a quick calculation for, I'm sorry, I keep seeing people ask about pounds. So I can't necessarily tell you how many pounds your vehicles are, but I'm sure if you Google it, you will find out how much your vehicle weighs. So now in regards to the mileage method, that's pretty much the IRS quick way of saying, you know what, if you don't want to keep track and you don't want to write off your payments, or even if you drive a lot and it may be to your best interest, instead of writing off the lease payments or depreciating your vehicle, we'll just do the mileage method. So what that means is you just track your miles from all of your business activities throughout the year. And then you will multiply however many miles that is. For 2019 was 58 cents per mile. Now, the thing that people always make the mistake of when it comes to the mileage method is that they feel they can take the mileage method and then also deduct gas and insurance and all of those things on top of it, but you can't. The idea behind the mileage method is it's kind of like a quick calculation for you to say, you know what, I'm just going to write off my vehicle this way. Something to note is that you have to either take advantage of the mileage method or the actual method, right? So the actual method is writing off your actual expenses, such as, you know, like your lease, your insurance, your gas, all of those things, or you use the mileage method, right? Which is the quick calculation. So I don't think I have any more to really say.
No, real quick, because as I'm listening to you say, and from a CPA standpoint, is it best that, like, if I have a credit card, I allocate that credit card specifically to all those things, right? So that makes it easier to make for bookkeeping. Would that be a good idea?
No, because when we're doing your bookkeeping, we'll be able to allocate that. What you guys should have, and I don't know, I'm going to put this out here. I don't know if you guys have it, but everyone who has a business and you guys have business credit, everyone should have a gas card, right? So if you guys don't have gas cards, you should get gas cards.
A card for gasoline?
Yes, but it's strictly under your business name. So they base it off of your business credit, and that's how you qualify for the gas card. So like I have BP, Shell has gas cards. There's a few different gas companies that issue gas cards, but that is a really good way because you know that card is specifically for gas. There's usually like you'll get a like reduced rates, and then it's a really good way to just kind of keep track of it and build your business credit at the same time. So that's really good.
I didn't even know about the gas card. I learned something. I just learned something just now.
Gotta call my CPA tomorrow on Friday.
You learn something every day. You learn something every day. So you shouldn't be getting gas because like right now I'm getting gas just on my regular credit card. I shouldn't be doing that.
Everything should be under your business name, and that's something very important. So when you say under your credit card, is it your personal credit card or a business credit card?
The gas is my personal credit card.
Personal. So yeah, you need a business credit card. So it should either be under your business gas card or your business credit card. And I'm glad that you said that because that is the number one struggle that I have with business owners is that we commingle our funds, right? We take our personal funds, our personal credit, and we pay for things on the business side. And we have to start looking and treating our businesses like separate people, right? Like you would never come and pay my bills. I would never come and pay your bills, right? And you just have to kind of look at your entity like that as well, right? Like your entity has their own, has its own legal name. It has its own EIN number that acts as a social security number, right? So you definitely should not be paying for your gas. Now that you have the car under your business, you should not be paying for your gas under your personal card. Okay, so I'm happy that you said that.
Noted.
Okay.
I appreciate that. So I should be paying for it for either a business credit card or a business debit card.
Yes. Mm-hmm.
What about any other expenses that might come with the car? Everything should be paid.
Everything should be under your business. That car now belongs to your business. So look at it as though like my car, right? Like if I needed tires, you wouldn't come and be like, you know what, I'm going to pay for that. That's kind of like what you're doing. I mean, unless you just wanted to give me like, be nice and generous. But, you know, ideally, that's how I like to explain it to people. You know, you just have to separate everything out. That car is not your car. That car is the business car. So you want to take care of all of the expenses underneath the business, maintenance, you know, car registration, inspection, everything related to the car should be under the business name.
Got it.
And yeah, so the 6,000 rule, the Range Rovers range from 4,900 pounds to 5,745 pounds. So the Range Rover is just underneath 6,000 pounds.
Mm-hmm.
So that's why we did the what we doing this? We're doing standard or actual?
You're doing actual, right? Actual. You guys are gonna do actual, and you're gonna write off your payment.
Right. So that's why we did actual. But what we are using the 6,000 pound rule for is our truck.
Big truck.
The big truck, not the Range Rover.
Not that truck.
The
real truck.
The trucking company.
18-wheeler. So yeah, you want to talk about that?
Yes. So that is definitely a really good perk for my people that get into trucking, where you are able to write off 100% of the vehicle cost. So again, you may need, starting up that business, you may need to write that vehicle off 100% in that year. But again, let's say if we sat down and we were like, you know what, if we kind of take the entire cost of the vehicle, that may put us in a negative, depending on what you're trying to do. You may try to qualify for a home, you may be trying to go for a loan, right? You may not want your, even though when they do loans, they add back depreciation, but you may not want to exhaust all of that expense for 2020. You may want to kind of keep it on the book so that you can exhaust it over time, right? And that is what's extremely important. And that's why it's important to have these conversations, right? So there's a couple things that I pointed out so far that you need to have the conversation. You need to understand if you're going to do the actual method or the mileage method. You also need to understand if you're going to take advantage of bonus of depreciation or you're not, right? And so those conversations have to be had, and they have to be had ideally before the year is over, right? I have so many clients that I engage, and they're like, yeah, only time I talk to my accountant is January through April. But now that you guys have businesses, you have trucking companies, real estate, whatever it is, you can't wait until the next year to talk about taxes.
It's a fact. It's extremely important. And I feel like there's so much stuff that people don't know. Like, you know what I'm saying? It's like, even I didn't know about that, the gas card.
Yeah.
And I'm a financial advisor. So there's so much information out there. And it's like, if you're not properly educated, you can make mistakes. And like I said, it's a lot easier than I thought it was going to be. All you need is the EIN number. You need a business name. So when you get the car, you give them that information.
I think you need the articles of operation.
The articles of operation, your address that you incorporate the business with. And then if the business is like under 10 years, I don't think you could get it just solely on your business. So you have to be a personal guarantee, whatever.
But even that is good to know. So like, it's good to know that to have good credit too, right? Because if your credit's not great, then you can't be the personal guarantor for your own car.
Yeah. So they run like your personal credit, but it's under your business name.
Right.
So the business is the cards under the business names, but they run your personal credit.
Exactly.
And it's a vibe.
It really is. Like just knowing that card, like knowing that my card belongs to my business, it just, I don't know, it feels better. But just to kind of piggyback off of what you guys were saying, it's really important. One, yes, your credit needs to be in shape, right? You have to have your credit together. But to just kind of go through the ways that you can qualify for a car loan. One is completely outright purchasing it through your business name. However, you're not going to be able to outright purchase it under your business name if one, you don't have established credit or you've never had any big loans, right? So for me, that was the scenario where I had some business credit. I had the taxes, right? So they should be asking for taxes. They ask for your bank statement, right? Because ideally, just how you need to qualify for the loan, they want to see what's going on your business end. So you have to show them bank statements. You have to show them tax returns. But that may not be enough, even if you have the income side, because what they may want to say is, okay, we can't really trust you to give you this big loan because you've never had a loan exclusively in your business name. So that's when you as the individual have to come in and back the business, right? And that can be done in two ways. You can either come in as a co-signer, which you guys were just talking about, or a co-applicant, right? And so those are two different things. Like I went in as a co-applicant. I'm not sure if you guys went in as co-signers or co-applicants. Because it's kind of like the difference is that a co-signer, like it doesn't show up on your personal credit, right? But a co-applicant, it does show up, right? It shows up on my personal credit because it's almost like me and my business, we went into the loan together. So that's why it's showing up on my business side as well as my personal side. So I just wanted to point that out, that there are, that's also another way as well that, you will qualify. But again, that's kind of more of a lending thing. From an accounting side, you definitely got to make sure that, your taxes are completed. You have to make sure that it is a situation where, some lenders may request a profit and loss statement, i.e. you'll need to make sure that your bookkeeping is in place, which a lot of business owners, that's like the first thing that they neglect is their bookkeeping. So just being financially set so that you can position yourself to not only save on taxes, but like really build your business credit.
All right, we got a few questions for you, Miss Business. But before we go to the questions, everybody on YouTube, if you could be so kind to hit the like button, greatly appreciate it. And for people that might just be tuning into YouTube that might not know what's going on here, so as I said, EYL University is our educational platform. So we have 70 archived classes, and then we have weekly classes every single week on different topics from different presenters, everything from how to start a marijuana business to car insurance to real estate to taxes, everything. And then we have monthly financial planning calls with me. We have bi-weekly real estate calls with MG, the mortgage guy. We have the book club ran by you, movie club ran by you.
Yep.
Private Facebook group. So it's the whole community. It's not an investment club. It's not an investment tips. It's the actual university where you learn. And we're going to actually open our trade department, God willing, in 2021 with the HVAC and like plumbing and stuff like that to try to teach people that.
Skills,
so,
man.
Skills is very important. Skills is very important. Yeah. So once a month, we do what we call open enrollment to just like open it up to the public and then just, show it and you can, see for yourself. So right now for Black Friday, to the end of Black Friday, we're running a 50% off sale on an annual membership, which is $333. Something like that. Yeah, for the year. $333 for a year. It's like,
I know there's a bunch of people that's like waiting for 9 o'clock to get that PS5. Sure. This is like, less than your PS5.
No, it's close to
this is less than that.
So I'm gonna put the link in here. The link is also in the description. So if you wanna do it, the code is EYL50, and you go to EYLUniversity.com and you get 50% off, a couple $100, less than a night out in Atlanta. That's the only place. Atlanta's the only place that's open, so that's the only thing I can really say.
That's a big fact.
Ain't no other place open. But part of EYL University is that we get question and answers. So Market Mondays is kind of like a case study in that. But this is what we do every single week, where we bring an expert in the field and then people get to ask them questions.
My graduates from my school being Forbes, bag drop. Bag drop.
A mic drop. Bag drop.
Bag drop.